Hi everyone, welcome back to Give Yourself a Raise. Today we are going to cover the Ethereum network. Before getting into this, I do want to let you know I am not a financial advisor or a professional on this topic. This video is meant for education and entertainment purposes only, so do your own research before jumping into anything I talk about on this video or any others. What is Ethereum? Ethereum is a decentralized platform that runs smart contracts, running applications directly as programmed without the possibility of downtime, censorship, fraud, or third-party interference. Alright, so let's slow down for a second. What is a smart contract? Let's go over that really quick. A smart contract is a self-executing contract with the terms of whatever is agreed on between buyer and seller being directly written into the code. This code and agreement exists across a distributed, decentralized blockchain network. If this confuses you on why this is needed, here are some examples of some major things that smart contracts can solve, mostly cutting out the middleman in so many things that we do today. Think, for example, these large bank wire fees that take days to process. Also, when closing out a mortgage, you have to close with a title company. A smart contract can do everything a title company can do without those huge fees attached. Also, the ability to tokenize assets like real estate, stocks, bonds, gold, silver, and so much more. So one of the biggest use cases in Ethereum right now is getting you yield on your assets. Taking the power the banks have had over you for all these years, giving you 0.01% interest on your money sitting there, well, they pad their pockets and pay out the shareholders. So this is just giving you choices and allows you to take back some of that power from the banks. Doing all this, well, in theory, creating a much more secure product. So you may have heard of Bitcoin being referred to as digital gold, as it is proving to be a store of wealth. You could think of Ethereum as digital oil, as to complete transactions on Ethereum, you have to pay a gas fee. For example, like driving a car, it takes gas to run that vehicle. Ether is the gas that makes the Ethereum network go. Ethereum is a valuable tool that many developers and entrepreneurs are using to build decentralized businesses that could not be built before. Some of the use cases building on the Ethereum network are supply chain management, crowdfunding, DeFi, CeFi, decentralized identities, voting. Things like DeFi and stablecoins are making the demand for Ethereum rapidly increase. Now, the Ethereum network is also processing way more transactions than the Bitcoin network, as well as the number of apps and businesses are quickly increasing as well. So many have tried to build on the Bitcoin network, but it is just too slow and clunky to do so. So today, to really be taken seriously as a project and gain a user base, you pretty much need to build on the Ethereum network. Now, this can also change in the future with cross-chain protocols like Polkadot coming in the mix, trying to allow all different networks to work together. Now let's go over staking on the Ethereum network and why this is a major part of Ethereum's success moving forward. Today, many blockchains like Bitcoin and Ethereum use proof of work, which is part of a mining process to validate transactions and generate new Bitcoin, Ethereum, etc. A big issue with proof of work is its scaling. It consumes more and more electricity over time and more computers to make it work. It works well and is extremely secure, but the challenge of scalability is there, causing transaction fees to rise. For example, in bull runs, ETH gas fees go through the roof, just because the network is so congested. Now Ethereum is migrating to proof of stake with Ethereum 2.0, which says if you run an Ethereum node, you can be a validator. And depending on the stake that you are holding, meaning how much Ethereum, you have an increased chance in being randomly selected to validate the next transaction, which rewards you in Ethereum. It's like an interest payment for staking your ETH. This saves on electricity, improves scaling, and lowers fees. All very important things for mass adoption. And if ETH 2.0 is successful, it will likely be the settlement layer of the world. It just doesn't make sense for Bitcoin, as the fees will be way too high. Bitcoin does not scale, and it really isn't trying to. It's proving to be a store of wealth, similar to gold or silver, while ETH is being used for settlements. Now, Bitcoin chose this route. Bitcoin chose security over speed. You just can't have both. Think of Visa, for example, and how many times people have to get new Visa cards for false transactions. In Bitcoin's existence, it has never been hacked. Now, from an investment standpoint, I still think Ethereum has more upside than Bitcoin in this bull run. And if you are completely new to this space, Bitcoin and Ethereum are probably the two safest investments Now, this is not investment advice. This is just my point of view. I got into this market in late November, early December of 2017. And what I just said, I heard in many YouTube videos. And of course, I didn't listen. I went on chasing the shiny objects. All these new altcoins that were going to the moon and they were never coming back down. Well, guess what? Bought plenty of them right at the top and watched them fall about 95% or more. Still to this day, not back to where they were when I bought them. I would have been way better off just staying in Bitcoin and Ethereum. Now, after researching the market for these past 3 years and getting set up for what is going on now, I'm more comfortable with other projects and got in at way better entry points. Sorry, I digress. This is a video on Ethereum. I just wanted to throw that little bit in there to say, know what you're investing in before you invest in it. Cryptocurrency is very risky. Even if you are just in Bitcoin or Ethereum, it is still volatile, and it just gets riskier and riskier the further down in market cap you go with some of these really small altcoins. So that was just a quick overview on Ethereum and the use cases it has. So if you wanted to try out the Ethereum network and jump into one of the projects that I use, Celsius Network gives you yield for putting your digital assets on their platform. And you can also take crypto-backed loans. Some of these assets you can gain up to 16.16% yield on your crypto and 10.51% on various stablecoins. Now, I will have my referral link in the description below. If you use that and deposit $200 of any digital asset, you get $20 of free Bitcoin. Now, there are other brokerages, exchanges, and lending services that you can gain interest on your crypto, like Voyager, Outlet, BlockFi, Crypto.com, and many more. So I would say check them all out and see which one you feel works best for you. Now, if you're about ready to take advantage of these high yields in the cryptocurrency space, then give yourself a raise. I'll see you next time. Now, a few videos popped up to my left and right. If one of those perks your interest, go ahead and give it a click.